Well, joining us now is the newly appointed CEO of Jio BlackRock Asset Management. In his first ever television interview since taking over, Jio BlackRock is a powerful new entrant, of course, in India's 50 lakh crore mutual fund industry. It's backed by the digital scale of Jio Financial Services and the global investment engine of BlackRock. Now, just to give you a quick background, if you're not already familiar, just weeks after receiving the final SEBI approval in May of 2025, Jio BlackRock launched 3 debt-oriented NFOs, money market, overnight and liquid funds, and they raised nearly 18,000 crore rupees. Healthy institutional participation, lots of retail participation as well. Now, that number puts it among India's top 15 asset managers by debt AUM within 45 days of launch. Sid, welcome to the program.
Thank you for having me.
And congratulations.
Thank you very much.
What worked according to you? Was it the brand? Was it the reach, distribution?
I think it was a combination of all of those, to be honest. I think the value proposition for the funds that we launched with the target segment being primarily institutional really resonated well. And that was evidenced by just the sheer number of institutions that participated in the first set of NFOs. And that continues to grow, even post NFO. And then the brand that you talked about also clearly has a strong pull, which was evidenced by the retail participation that came into these funds as well. So combination of solid value proposition on the funds themselves, along with the trust and recognition of the brand, I think worked really well for us.
Typically, I think there's some 90 institutional investors and tens of thousands of retail participants, right?
That's right.
As a percentage of AUM, how would you split it? How much came from which segment?
I mean, as a percentage, predominantly it's going to be institutional. Right?
That is the segment, right?
That is the segment. Yeah. That is where these funds are utilized the most. And that is representative of our collections as well. So it's predominantly institutional. But yes, the number of participants from a retail segment that came on board during the NFO was very, very encouraging for us.
And I think we've spoken and it's been talked about that it's such a crowded industry and there are more players coming every day, new approvals, etc., coming through. Did you think of that as a bit of a hump to cross? And now that you've raised this money and quite successfully, a large number, is that a question which comes up now or not really?
Yeah, look, I think for us, if you take a step back, right, the industry, when we chose to enter the market here, it was also more about where the industry is going to go to from here. And we see immense potential for this industry to grow. Penetration is still fairly low when you compare it to other markets, but we're seeing the trend of more and more investors coming into the markets themselves growing. So this could easily be 2-3x in 5 years' time from now on, just in terms of the size. So I think the growth is there. Yes, more and more entrants are looking at the same thing that we are and coming in, but I think there is still space for all of us. There is still space for innovation. And I think by helping to grow the market, we will be successful along with all other participants in the market. That's how I look at it.
You have 5 approvals to launch 5 index funds, right? Yes. Equity and debt.
Correct.
4 equity, one debt.
That's right.
And by when will we will see these in the market?
So we're not going to put a date on it just yet. We need to go through some more steps before we confirm that. But imminently is the timeline for us to launch those 5 funds.
We ask companies who join us, what's the revenue target? Is there an AUM target with these funds?
No, we don't. Sorry to disappoint you, but no. The way we're looking at this, and I can get into this in more detail if you want. We are coming to market with differentiated propositions, as well as a differentiated digital-first distribution strategy. So there is a lot that we need to test and learn in this market. We've done the first set of NFOs. We learned a lot. We're very happy with how that went, and we are incorporating some of those learnings into the next phase. And I think really once we get through our first phase of fund launches, see how they go, learn about the market, see how they're reacting to our offering, is when we'll really start thinking about setting longer-term targets, right? And that's literally how we're looking at it right now.
What about actively managed equity schemes?
Yes, is the short answer. We are here to cater to the full spectrum of investors in India. That's how we are looking at things. So we addressed institutional primarily already with the funds that we've launched. We're moving into the retail segment now with these 5 index funds. And I really, when we think about investors in general, for me, it's not about active or passive. I think it's about active and passive. because I think both play a key role in the overall asset allocation that an investor should have in their portfolio. So yes is the answer. We will be launching active funds in the near future. We are looking at it through the lens of what is differentiated that we can bring to the market. So we've assessed what is available in the market right now. We've also assessed some of the capabilities that we can bring. Remember, half of the joint venture is with BlackRock, which has had decades of experience investing globally in markets.
For those unfamiliar, BlackRock globally is more debt or equity? In terms
It's more equity overall. Started off as primarily debt, but I think now it's a well-balanced. I think just in pure AUM terms, maybe more equity, but it covers the entire spectrum. BlackRock covers the entire spectrum of capital markets right now.
And active versus passive?
I don't have the exact splits with me right now. I have technically left BlackRock for the last year and a half, but it's more or less, I would say, 60-70% is probably close to passive.
Okay, and that kind of
in AUM terms.
And we will see some kind of the sort of same thing here as well, roughly?
Again, here we haven't set targets, right? So we recognize a few things. One is that the industry here overall, in terms of the split of active versus passive, is different to the rest of the world. So passive here is still in the teens in terms of the percentage of the entire market. If you look at Europe, that's over 30%. If you look at the US, it's over 50%. So the trends are kind of moving in the same direction.
Which is passive.
Towards passive. Yes. The trends are moving in that direction. So we see ourselves, as I said to you, we're here to address the full market. We see ourselves as a microcosm of the whole market. So as the markets evolve, our, I guess, representation in that will also change in the same way.
In terms of, is there a, so debt versus equity, right? I mean, obviously, you make more money on the equity side. I mean, debt to pricing, etc., in terms of products is very low. Active versus passive, also there is a bit of a trade-off. I mean, how do you see this broadly?
Yeah,
because you're part of a listed Jio BlackRock is part of Jio Financial Services. So for shareholders who are watching, just trying to give a flavor of how you're thinking about pricing margins, etc.
Absolutely. Look, ultimately, we all need to be profitable, right? So we really think about when we look at our product and we look at the pricing that we do on the product, margins are a very key factor that we're taking into account. I think one of the benefits that we bring is the technology that we're bringing onshore. So this is BlackRock's investment management technology, which is known as Aladdin, which is an end-to-end investments technology that really enables us to manufacture these funds with the highest amount of quality, innovation, but also at scale, right? So, and those scale benefits allow us to do a lot of cost engineering, which means that we're able to pass on some of those savings to our end customers while still retaining margin. So, and that's how we evaluate every fund is evaluated with that lens, whether it be active, passive, or cash.
Okay. Give me a straight answer, but profitability, of course, I mean, the business has to be profitable, as you said.
Yeah.
Okay. Now, again, to sort of take that point forward, as shareholders of Jio Financial Services are watching and they want to get a sense of what will be the size of the AMC business with it, how important, what size, but how important will the AMC business be when they kind of sort of look at, like a SOTP of the entire company, etc. Can you give us some way to think about this? Not exact numbers per se, but...
Yeah, look, sorry to disappoint you again by not giving you numbers, but the way we look at it, right, and I said this at the start, the first belief here is that the growth of the market. So this is a market that we think can grow, 2x, 3x from here in the next 5 years. And yes, we want to be a significant player in that market in that time period. How we actually set our targets, again, I'll go back to what I said at the start, is we need to learn about our kind of initial phased launch, which is across all asset classes and investment styles. And then we will evolve the strategy as we go from there. Our aim and vision, obviously, is to be a big player in this market in the near future, and be a big component of the entire Jio Financial Services ecosystem.
Internally, is there a target? You want to be amongst the top 5 in terms of AUM or some such metric?
Any of those targets as yet.
must have some kind of idea. You want to do well, but you're not setting yourself targets. You'll kind of sort of
Not as
respond
yet.
to
Like
other
I said,
markets.
we're really approaching this as a true startup where we want to learn and then evolve and adapt, and then we'll be in a better position to actually set some targets.
Many in the market feel that maybe in financial services with Jio BlackRock and Jio Financial Services, we'll see like a telecom moment, complete disruption. Is there room for that kind of disruption in this business? And of course, there it was, pricing in a big way, but reach, etc. as well. Here, what could be that big disruption? Are you thinking on those lines?
Yeah, look, I think of it slightly differently. Firstly, the industry itself is very different. So, the regulations are different. The level of competition that's prevalent here is also very different. I still think there is room for micro innovations or micro disruptions, whatever you want to call it. And that's how we're approaching it. So the fact that we are coming to the market initially with a digital direct first offering from a distribution perspective, that sets us slightly apart from a lot of the players here. Some of the funds that we're bringing to the market, you will see in due course, also have a very different sort of investment style relative to what's available in the market. So that's another change. Our technology platform that we're bringing onshore to India for the first time ever, that's another micro sort of disruptor, differentiator. And that's just, let's say, one part of the overall joint venture as well, right? So there's other things coming further down the pike. So the way I see it is a series of these micro disruptions over a time period could lead to a much bigger disruption, but it's different to how it panned out in telecom.
It's not like big bang and kind of sort of disrupt the market with one go. It's going to be many small disruptions which kind of total up to something big down the line.
That's how I see it panning out.
All right, Sid, we wish you all the best of luck to you, your team as you execute. Thank you very much for coming down.
Great. Thank you for having me.
Thank you.
Yeah, cheers.